Let's pull up the charts for Bank of India. The company just reported its numbers a short while ago. What we're seeing in terms of asset quality, seeing an improvement coming in. Outlook for credit growth is what we're watching out for, as well as the company's fund-raising plans. So let's bring on board A.K. Das, Managing Director and CEO at Bank of India. Thank you so much, sir, for joining in with us on Market Fatafat this afternoon. Now, my first question is mainly coming in. What has been the main contributor in terms of your bottom line this time in Q2?
Yeah, bottom line has definitely shown significant improvement. Main contributor, I should say, first of all, I will start with our credit deposit ratio, which was about 68% a year back. Now it has gone up to 76%. And second is, average advances growth, which has been quite, reasonable this time around. So this two factors, they have led to good improvement in our yield on advances, and concomitantly there has been good growth in our net interest margin also. Our global net interest margin is 3.04%, and our domestic margin is 3.49%. I must tell you, 86% of the loan books are sitting in the domestic arena. So that's a significant jump. And this is about profitability, and about profits. Yes, 960 is a decent number, and I'm sure this number would have been much more because we had to do some substantial provisioning in the standard assets as per the regulatory stipulation, up to around 900 plus crores. Otherwise, it would have been even much better. So all in all, I think it's a good financial this second quarter.
Absolutely. But sir, just what in terms of your net interest income, it's up 25% sequentially. So is there any one-time contributor then?
In NI, there is only one-time accrual, that is, interest on IT refund. That's about 175 crore. Similar thing also to the tune of 200 crore also was there during the corresponding quarter last year. Apart from this, as I told, improved CD ratio and good growth in average advances, which helps us in our interest collected on advances. Our domestic interest grew up by 14%, and our overseas interest grew by 68%. These were the two major things. Plus, of course, the realignment of interest rate, repricing of our assets also helped us in improving the NIA. On the other hand, deposits, they have interest expended on deposits have gone up. But as you all know, because of a longer lag involved in repricing of deposits, deposit interest cost has not gone up that much. In fact, we have reduced cost of deposits this second quarter. So all in all, these are the factors which led to good improvement in financials and profitability.
And then, so what is your guide?
So overall credit growth, global credit growth has been to the tune of 17%, and our domestic credit growth has been 12%. Through this year, to the 2 quarters, we have added incremental about 36,000 crore to the loan book, equally contributed by our overseas branches and our domestic branches. So, and if you see the RAM position, RAM has grown by 15.75%. led primarily by retail at 23% and agri 19%. MSME, as is a secular trend, has grown at relatively lesser rate of 9% plus. So these are the main thing. Corporate credit has grown by about 6% only. I think what we expected by Q2 may take little more time for the corporate credit to pick up further. There is definitely demand, but to translate into definite numbers, I think Q3 could be decisive. Now, as regards guidance, in the beginning of the year, I had told it's about 8 to 10% credit growth. And now at this stage, when our domestic has grown by 12%, I would continue to say that credit growth may not reach the pre-COVID peak, but it will be ranging between 10 to 12% for the entire year.
Okay. And sir, how is the corporate book performing? Where is the demand coming from?
See, the revival started, very recently, and as shown by various indicators, there are definite signs of revival. But again, economic variables, they are basically lagged variables. A lot of expenses are happening, public expenditure, budgetary allocation and all. So that multiplier effect may take one more quarter to take effect. So I see by the end of Q3, we may see a significant pickup in corporate credit. There is demand and utilization pattern has not improved much. For us, ODCC accounts, the utilization is about 65% only. So as the economic activities expand, I'm sure by the end of Q3, we will see some definite uptick in this.
Okay. Thank you so much, sir, for joining with us on Market Fatafat this afternoon, giving us an understanding of what we should be expecting from the company going forward. But